Hi everyone, welcome to Share and Review. Now this week we're actually going to look at Apple shares, and yes, they trade on the NASDAQ, so not the normal NZSX 50 shares, but that's because I've had someone put in a request to take a look at it. So happy to do that. So just before I share my screen, please remember that this is education purposes only. It's my methodology that I use to look at shares. So I'm wanting to obviously help and educate you. If you're looking for personalised advice, which this isn't, then you do need to go and speak to your own financial advisor. So let's jump across. Right, so I've got Apple up here on the screen, and as you can see, they trade on the NASDAQ. Now, just to let you know, up here, this is just the day's trading range. So just last Friday, which would have been Saturday, New Zealand time, it was down about $1.27 or 0.69%. Over on the right here, it has just showing what's happened after hours. So as you can see here, it's fallen another 54 cents or basically 0.3%. That's nothing to get concerned about, but that's just letting you know what is up there. So Apple, as you can see, it's really, I mean, it did have a positive week, which is great. If I hover here, it said it changed about 33%. But it wasn't a lot. Okay, we've had a really good candle this one here, which is great. So it could potentially be in an uptrend. So we'll put some moving averages over it and just see what they say. Now, with these moving averages, I always use the 30 exponential and then the 15. They're not a special number or anything like that. They are a fairly responsive moving average. So some people choose different ones. You know, I've followed people that use a 50 and 100 day or a 20 day and a 200 day. So the 200-day moving average is very, very slow. Okay, so that, yeah, but it just depends what you're wanting to measure. My suggestion is with using a moving average is stick to one that you're comfortable with. So what I'm using is a fairly responsive moving average, which means I could get some false signals, a lot more false signals than perhaps someone who's using like a 50 and 100 day. But it means I could potentially get into a move a lot quicker, and I could potentially get out of a move a lot quicker as well if something goes against me. So just looking here in regards to these moving averages, we're starting to see some good signs. It's just this week, it's actually closed above both of those moving averages, which is great. What we haven't seen yet is we haven't seen this 15-week, which in my example here is the orange color. It hasn't quite crossed above that 30-week. And for me, that is something positive that I do want to keep an eye on. And you can see back here, back in March last year, yes, we started to get some good movement, strong movement up, which is great. Then went through a sideways patch and then it took off. Okay, so basically here on the 12th of March last year, when it crossed through those moving averages was when we then started to have a very, very strong run. Slipped back a bit through the middle, as you can see, a bit of a trading range, and it could be in a trading range. I don't know, but it's certainly looking like it's wanting to break out above that. And as you can see here as well, back March this year, it did cross below those moving averages, and it obviously had a little bit of a downward period, and now it's looking like it's wanting to try and rally again, which is a positive sign. For me, if I was watching this share, I would want to see those moving averages cross to the upside, and then that can usually confirm that we are in an upward phase. Let's just look at the 5-year period as well. Okay, so it definitely is getting close to those all-time highs again. So we can see here, December last year, it hit $1.98 per share. We're trading at $198, and we're now trading at $183. So again, we're up around, getting close towards those highs. If it definitely breaks above that high, you could probably safely assume that we would definitely be in a bull market. As you can see here, that what happens is new all-time highs tend to make more new time highs. And even though you do go through periods of consolidation, then we tend to have, excuse me, upward runs, and then we go through periods of consolidation again. I'll just take it back to the 2-year period. One thing with Apple as well is these D symbols down here, that's actually the dividend, and it brings up how much they're paying out. So it looks like they're constantly paying out about 24 cents per share in dividend. And The thing is with Apple, they're actually paying them out quarterly. So potentially a good return there by if you're looking to have dividends. Okay. Obviously for me, I don't like to invest in shares just solely for the dividends. But depending on your style and your methodology, that could be something. I'll just take these moving averages off and we'll see if we can compare it with the NASDAQ. Yes, we can. So this is something else that I do look at is where in relation to the main board that it's trading on, where in relation is it trading? So at the moment, it is trading below the NASDAQ. For me, I do like to see the shares trading above their indices. And the reason for that is then it does confirm that it is a hot sector. And you can see that again through this period here, basically since February 23, it's been trading through, okay, and that's pulling up that really strong run that I showed you earlier as well. Even though through this down period, it's still traded above the NASDAQ, which was great. And it didn't really hit below until probably January this year. So we've almost been on a bit of a downward trajectory. So for me, I would want to make sure that those moving averages have crossed to the positive. So that in my example, the 15-week has crossed above the 30. And also I would want to see that it's trading above the NASDAQ. Okay, because then that also reaffirms that it's a strong performing share. So I hope that's helped. I hope that's given you some value. Certainly something to keep an eye on. I know Apple features a fair bit throughout the market with news and that sort of thing. But if it was me, I would just be keeping an eye on it because it's certainly got potential there, but I wouldn't be jumping in just yet. So yeah, I hope that helps. And if you want me to have a look at any more shares, by all means, pop them in the comments and let me know and we'll take a look for you. Until next week, have a great time.